all of the regulatory back and forth that we're seeing, that we're hearing right now, whether it's Senator Warren, whether it's some of the commentary, I think back to Kathy Wood last week, who was saying maybe you reclassify cryptocurrencies as an asset class because that'll realize more opportunity for investors as well. How are you thinking about this?
Great to be on. There's a lot of different things that are happening in the space. It's very dynamic right now. And I think, certain types of crypto assets make a lot of sense to be called an asset because they're now by de facto an asset class. And then there are certain things like stable coins where they're supposed to be very much following one-for-one backing of dollars to a stable coin. And in that case, it really is a U.S. dollar, but only if you've built it correctly. If you're regulated, if your reserves are clearly in cash. To me, that's not a new type of asset. That's exactly the one we have now. It just moves around and has different properties. And that's an important innovation. So there's so many things that are going on. You really have to dig into what is an asset meant to be doing. And then I think everything flows from there.
Tether, is this a canary in the coal mine in terms of some of the cryptocurrencies that are out there and perhaps that lack of regulation or disclosure, or is this a one-off situation?
Well, from the very beginning, we've built Paxos in a highly regulated way. And the whole point was that you could go from early adopter to mainstream. But that mainstream adoption would never happen unless you have the right types of protections in place, the right type of regulatory oversight, which is really a way of creating trustworthiness. And financial products can be very opaque. And I think when you look at a stable coin, what you have to understand is what are the reserves in? Are they really safe? Are they held in something that's really cash and equivalents or not? Because if it's not, you could start to have credit risk and interest rate risk. It's almost like an unregulated bank in some sense. And then you have to understand who's regulating this. And at Paxos, we have a primary regulator, the New York Department of Financial Services. And the reason that's so important is because there's privacy controls. There's if something was to happen to Paxos, there is receivership controls. There's oversight. There are exams. So many important things that we've built in the financial system over time. And so you never know when something that's unregulated might be operated in the right way or not the right way. And that's the whole point, is that regulation creates de facto understanding of trustworthiness.
So what does all of this mean specifically for Paxos, especially as we've seen these incredible fluctuations, dramatic fluctuations in the price of Bitcoin and Ether and the like right now? Are you still able to grow? Is that tied to prices going up? What does that look like?
So this has probably been the most exciting time for Paxos. We built our business for the mainstream moment when you would need infrastructure and you would need regulation. And ultimately, I think the promise of this technology, whether it's crypto assets or stablecoin assets, it's all about blockchain changing the way different assets can move to be always on and be responsive. And I can tell you that large financial institutions, not just, for instance, PayPal and Venmo, which are using us, but so many others are really looking very hard at how this can change their business. They want to offer new products for their customers. They want to change how their current products work. And that's the promise here. And that's what Paxos is offering as an infrastructure-only firm. And so I think there are going to be some very exciting things over the next 6 months that come out that will really show how PayPal led the way and has really changed the temperature in the room fundamentally for the industry.
Shepard Smith here. Thanks for watching CNBC on YouTube.